For the third time in as many months, Cathie Wood's iconic ARK Invest fund has made a bold acquisition of Tesla stock, purchasing almost $11.7 million worth of shares across three of her exchange-traded funds. This coincides with a period of high volatility in Tesla's stock price, which has followed an exceptionally poor 2022, prompting investor fears regarding Musk's actions on Twitter. Why, though, is Wood so focused on Tesla? Cathie referred to Musk as Tesla's Renaissance man in an exclusive interview, implying that the business has an advantage over rivals. In Wood's future, Tesla's stock price will have risen to a point where ordinary investors will not be able to purchase it. We'll explain why you need to enter as soon as possible in this video, but hit that subscribe and like button before we head there. For the third time since October, celebrity investor Cathie Wood has taken control of a substantial chunk of Tesla stock after the company's latest decline to its lowest point in more than 2 years. It's important to remember that Tesla's stock had already dropped more than 19% in December and almost 55% for the year when Cathie made her purchase. Additionally, ARK has lost almost 13% in that month and 64% in 2022. A daily transaction report sent by email indicates that Wood's ARK Invest paid an estimated $11.7 million for 74,862 shares of the electric vehicle manufacturer spread across three of her exchange-traded funds. Two such funds are the Tech and Robotics Exchange-Traded Fund and the Next Generation Internet Exchange-Traded Fund. After Zoom and Amazon, Tesla is the third largest stakeholder in ARK's financial product line. In Cathie's opinion, Tesla represents the greatest substitute for vehicles made by conventional automakers. With its colorful and occasionally erratic creator, Elon Musk, leading Tesla, has altered the century-old vehicle industry in just 16 years. While Tesla operates with agility and creativity, traditional auto companies are finding it difficult to stay relevant in a world that is more focused on software. Their size and bureaucratic structure also cause them to be reluctant to adapt to client requests. These businesses have a distinct culture from software companies and rely on lending money to customers to increase sales. Rather than being a traditional car maker, Tesla's rate of innovation in the high-end vehicle sector is more akin to tech titans like Google and Amazon. Its remarkable market valuation acts as a cautionary tale to other automakers, informing them that in order to stay competitive and relevant in the market, they need to create creative business models akin to Tesla's. While acknowledging that other automakers like VW and BMW have made notable advancements recently, Cathie said that Tesla still outperforms them in terms of power and range. Tesla's inventive electric cars and state-of-the-art technology have upended the established auto industry. In the market for electric vehicles, Tesla has a distinct advantage over other automakers. They were among the first manufacturers to offer elegant and useful long-range electric cars, and they still set the standard for range and battery technology. Furthermore, Tesla has made significant investments in autonomous driving technology, which has the potential to completely change the auto industry. Tesla has been able to move faster and more nimbly because of their focus on these areas, even though other automakers are also investing in electric vehicles and autonomous driving technologies. However, as more automakers like Ford, General Motors, and Volkswagen step up their attempts to create electric vehicles, the market for these vehicles is becoming more competitive. Wood asserts that unless automakers want to incur losses on their vehicles, they will not be able to match or compete with Tesla's combination. When asked what she thought about big businesses taking on Tesla in the electric vehicle market, she stressed the value of range and performance. In mid-October 2022, an ARK CEO gave a positive statement about the top electric vehicle maker in a CNBC interview. Tasha Keeney provided an explanation of ARK's extreme optimism on Tesla in a recent interview with Yahoo Finance. "I'm coming to believe that the car industry as a whole faces an existential danger from Tesla's creative business strategy." In a landmark essay published in 2011, Mark Andreessen, co-founder and general partner of venture capital firm Andreessen Horowitz, stated that software is eating the world. Tesla has a big advantage over traditional automakers, its mastery of software, which has a major role in the company's success. These conventional businesses, in my opinion, are ill prepared to compete in the software driven world of today. They suffer from issues like a scale, bureaucracy, slow customer service, reliance on customer financing. Because of this, the top automakers acknowledge Tesla as a formidable rival. The largest issue confronting Volkswagen and other automakers is that they lack the knowledge and experience needed to compete in the age of the software car, as stated by the chairman of the company after their vehicle emission crisis. An industry that has existed for more than a century has been completely revolutionized in just 16 years thanks to Tesla and its occasionally unpredictable creator Elon Musk. Chief Executive Officer and founder of ARK, Cathie Wood, expressed her lack of concern when asked about Elon Musk's leadership at Tesla. This occurs at a time when investors are worried about Elon Musk, the CEO of Tesla, using Twitter excessively. According to Cathie, the possibility of a new cash stream is Tesla's hidden weapon. The primary drivers are autonomous taxis, which will account for 60% of anticipated value in 2026 and more than 50% of Cathie's projected EBITDA. Calculations indicate that in 2026, revenue from electric vehicles will make up 57% of the company's total revenue, but their margins will be significantly lower than those of robotaxi revenue. Despite having previously said that Tesla will never be able to provide autonomous ride-hailing, ARK's growing trust in Tesla's self-driving capabilities has resulted in later improvements. They now project that the launch will occur in 2026, which is 4 years later than Musk had predicted. Additionally, they predict that Tesla will launch for-profit autonomous ride-hailing services in 2024. The updated model that investors are using increases Tesla's capital efficiency even further. They predicted that in 2025, Tesla will invest between $6,000 and $8,000 for each extra unit of capacity. This is significantly more than the $80,000 they predicted the year before to get the Model 3 up to speed. It is probably realistic to anticipate that, in terms of capital investment efficiency, Tesla will pay, in 2026, between $2,000 and $7,500 for each extra capacity unit. Based on the company's most recent model upgrades, Tesla stock might be valued between $2,900 and $5,800 in 2026, according to ARK's bear and bull case scenarios. If this happens, only wealthy investors will be able to purchase Tesla stock, rendering ownership of the company unaffordable for the typical American. According to Musk, owners of Tesla cars would be able to include their cars in the ride-sharing network, and the business will charge a commission for each journey. Musk has also stated that he anticipates the service to launch as early as 2021, though it is unclear if the business will be able to fulfill this aggressive schedule. It is noteworthy that technological difficulties and regulatory obstacles could cause a delay in Tesla's robotaxi service launch. ARK predicts that its current fleet of human-driven ride-hailing cars would gradually switch to an autonomous ride-hailing network if Tesla is unable to develop a robotaxi service. In spite of ARK's distinct and higher price per share requirements and Tesla's prime priority of reaching full autonomy, the company may still introduce a human-driven ride-hailing vehicle within the next 5 years. Investors and analysts who are bullish about Tesla's prospects predict the company will maintain its leading position in the rapidly growing electric vehicle market and possibly even branch out into other renewable energy markets like solar energy and energy storage. Some experts and investors, on the other hand, are more realistic and fear that the company won't live up to its potential and end up being simply another production company. The bears claim that the company is excessively subsidized, overpriced, and susceptible to competition. Estimates for Tesla stock prices show a wide variation. Nearly twice the present value of the firm, $302.50, is the average 12-month price objective for Tesla on Nasdaq. For Tesla shares, the most optimistic 12-month projection is $760. Furthermore, the most pessimistic analysts that follow Tesla predicted that the price will fall to $73 within a year. Views among investors on Tesla's short-term prospects are generally very different. For instance, Cathie Wood thinks that the current drop in Tesla stock represents a great time to make investments. In an interview, Cathie Wood expressed her bullish outlook on Tesla. She thinks that Tesla has a big advantage over other automakers, and if one compares automobiles based on range rather than brand, Tesla comes out on top. In addition, Wood called Elon Musk the Renaissance man of Tesla and expressed trust in his ability to lead and steer the company, even in the face of worries from other investors regarding Musk's diversion on Twitter. For the